Good day, Junior Tukkies. I'm Mrs. Brimacombe, and we are going to look at Bank Reconciliation Activity 6. This will be our last activity on bank reconciliation. In this activity, we are going to look at if a cash receipts journal and cash payment journal is given to you and you need to compare it to the bank statement. I've also included internal control in this question. Always make sure that you study your internal control. You need to be able to apply it into the different topics. Also, make sure that you always study your theory. All tests and exams will consist out of theory questions, which is easy marks to get. Looking at the first question, indicate whether the following statements are true or false. Question number 1, a debit balance on the bank account reflects an unfavorable bank balance. This is false. Why? A debit balance in the bank account is a favorable balance. It's a current asset. Question number 2, interest on the bank overdraft is an operating expense. This is also false. Interest on overdraft is the cost of borrowing money. It doesn't form part of your operating expenses. The third question, bank overdraft is a facility whereby the business can use more money than they have in their current bank account. This is true. A debit order is permission that is granted to a third party to automatically receive monthly payments from the current account of the business. This is also true. And then the last question, a debtor can pay his or her outstanding debt by EFT and send the proof of payment to the business. This is also true. We actually want to encourage our debtors to pay by EFT. This will limit cash on the premises and chances for cash to be stolen. So we need to compare the bank statement with the cash journals, and we need to complete the cash receipts journal, cash payment journal, the bank account in the general ledger, and the bank reconciliation statement. These are the type of questions that you can expect in grade 11. Comparing the cash receipts journal with the extract from the bank statement. A reminder, a bank statement. The credit side means deposits made into the business account. So it means that the business received money. So when we compare the cash receipts journal, we are going to compare it to the credit side. All payments will reflect on the debit side on our bank statement. So when comparing the cash payment journal, we will look at the debit side on the bank statement. So the first step here is in our cash receipts journal, we have a question mark. We need to solve that question mark. So to solve that, we need to work backwards. So 27,800 minus 3,500 minus 8,800. Now we're going to compare, does that amount reflect on the credit side on the bank statement? No, nowhere does it reflect. It means that this does not appear on the bank statement. We will need to take it to the bank reconciliation. If we now look at the bank statement on the credit side and we compare it with the totals in the cash receipts journal, the 3,500 reflect, so we just tick it off. The 8,800 does appear, but now on the bank statement, I've got 4,500 deposit from a tenant, Derek. Tenant is people who are renting from us. So it's money that the business is going to receive, money that the business did receive. So it must be recorded in our cash receipts journal. Source document, bank statement. From who did we receive the money? From Derek. How much did we receive? 4,500. For what reason? Rent income. Always be specific. Then if you go down to the bottom, there's a question mark and it says interest received. So this bank statement, this extract is testing skills you've learned in grade 10 already. How do I find now that missing figure? We simply need to take the difference. The difference is 440, and that will now go into my cash receipts journal, source document, bank statement from who? BF Bank, 440. For what reason? Interest on current account. Now that we've ticked off and circled everything, we can total. The total for the cash receipts journal is 32,740. Comparing the cash payment journal, we are going to compare it to the debit entries on the bank statement, and we're going to do the same as we did earlier. We are going to tick off where it appears on both, and then we're going to circle the entries which only appears on either the bank statement or in the cash payment journal. So if I look on our cash payment journal, we've got 4,300 and 2,000 that does not appear on our bank statement. So if it doesn't appear on our bank statement, we need to take it to the bank reconciliation statement. All entries on the debit side on the bank statement will go into our cash payment journal. So the first one that we've got there is a debit order, SAN Insurers, and it's a question mark. So how do we solve the question mark? We take the balance, 15,500 minus the 12,100. And the difference, 3,400, is equal to my insurance which we've paid. But now I can't go and put 3,400 into the CPJ. Always look at the additional information. It says 30% of the debit order paid to SAN Insurers was for the owner's personal insurance. Business entity principle, GAR principle, says that the owner's personal finances must be kept separate from the business. This means that 30% of 3,400 will go towards drawings, and 70% of the total will go as a business operating expense. So in our CPJ, who did we pay? SAN Insurance. How much did we pay? 3,400 in total, but 2,380 was for insurance, for business expense, and 1,020 was drawings, because the owner took money from the business for personal use. Then we have our next debit order, Telkom, 2,200. In our CPJ, source document, bank statement, who did we pay? Telkom. How much did we pay? 2,200, and this was for the telephone. Now I've got left cash deposit fees, service fees, internet banking fee. All of this is regarded as bank charges. It must always be added together. So the total bank charges is 681. So in my CPJ, source document, bank statement, who did we pay? BF Bank. How much? 681. For what reason? Bank charges. Once we've taken all the transactions that did not appear in our books but appeared on the bank statement to the cash payment journal, we can total. So the total is 23,531. Starting with our opening balance, they provided it to you. The bank account in the general ledger has a favorable balance of 12,000 on the 1st of March. Favorable balance will always appear on the debit side in our bank account. So March the 1st, balance brought down 12,000. Now you need to make sure that you take your totals, which you've calculated in the cash receipts journal and the cash payment journal, to the bank account. From the cash receipts journal, bank will always be debited. You can either write sundry accounts or total receipts. From the cash payment journal, bank will always be credited. Again, you can either write sundry accounts or you can write total payments. Once I've taken the updated totals to the bank account, I can now calculate my new bank account balance. So I'm going to add the debit side minus the credit side equals my new balance of 21,209. Completing the bank reconciliation statement on 31 March 2021. Always make sure that you know your formats. We start with the balance as per bank balance as per bank statement. Nowhere that they provide you with the balance as per bank statement. It's not a mistake. This means that I will need to calculate this figure. This will be the balancing figure. Next, we're going to look for, was there any outstanding deposits? It will always be credited on the bank reconciliation statement. The bank reconciliation statement, everything except balance as per bank account appears as it would on the bank statement. So I've got an outstanding deposit, 15,500. Remember, that was a calculation done. Now we need to look for, was there any outstanding EFTs? Yes, we've circled that. We had 2 outstanding EFTs. It will always appear on the debit side. Why? Because on my bank statement, all payments will appear on the debit side. So on the debit side, EFT number 4, 4,300, and then EFT number 5, 2,000. In this activity, there were no errors made by the bank. So next, we're going to fill in balance as per bank account, and it should always appear as it appears in your books. Make sure you take the total that you have calculated. So the balance as per bank account is 21,209. Once I've now completed all the transactions, all the entries in the bank reconciliation statement, we can now calculate the balance as per bank statement. And this reminder will be the balancing figure. So we need to add the debit side. If we add the debit side minus the credit side, the balancing figure is 12,009. Now, why did I start with the debit side? I quickly just check which side has the highest amounts. And it's clear there's a 21,209, which is higher than the credit side, the 15,500. And that's why I started adding up on the debit side. Don't forget, you can also choose to do the one column method. The last questions, internal control. Explain to Trevor why is it important to prepare bank reconciliation statement at the end of each month. Provide 3 points. So this is to improve internal control by minimizing fraud or errors because records are checked against external source. Remember, the bank statement is an external source. It improves internal control by identifying outstanding EFTs and deposits. Can you see that I'm elaborating? I'm not just saying it helps for internal control. To detect if there's any errors or dishonesty at an early stage. The next question, provide 3 advantages of internet banking. 1, do not have to stand in queues to pay account. 2, don't have to walk around with cash. Maintain your internet banking limit. You can do it yourself. Payments made immediately and send proof of payment to the beneficiary. So these are all some advantages of internet banking. Thank you very much. I hope you enjoyed this session, this video on bank reconciliation. This concludes now bank reconciliation. Next, we're going to move on to creditors reconciliation. I want to leave you with this quote: you are capable of more than you know. Have a wonderful day.